Hello, Market Club members everywhere. Jeremy Lutz here with your midday market update for Wednesday, the 19th of December. Looks like the optimism that fueled yesterday's rally and actually this week's rally has turned to uncertainty today as traders take a breather. Traders are keeping a close eye on developments in Washington as the U.S. government continues to work toward an agreement to avoid the looming fiscal cliff. And while signs of progress towards a compromise helped to drive stocks higher earlier in the week, it looks like we may be waiting for some more concrete signs of an agreement before we move along. On the economic front, however, the Commerce Department released a report before the start of the trading showing that U.S. housing starts came in well below economists' estimates in November. The report said the housing starts fell 3% to an annual rate of 861,000 in November from the revised October estimate at 888,000. Economists had expected housing starts to fall somewhere in the neighborhood of 865,000 from 894,000 originally reported for the previous month. At the same time, the Commerce Department said building permits rose 3.6% to an annual rate of 899,000 in November from a revised October rate of 868,000. And with that, let's go see what the trade trials have to say about the markets today, and we'll just move along to our portfolio manager here, and we'll start with the Dow. Stocks today have been really moving at a real tight range today, as you can see from this candle formation here. They kind of opened flat, moved a little above, a little down. They've kind of been back and forth. Of course, President Obama just gave his speech on, or a statement on future gun control laws, as well as kind of a statement about the working on the fiscal cliff, and really didn't do much with the market. As you can see, it's much the same story as yesterday. Dow's right now is at plus 70. Monthly trade triangle is still down, so long term we're still negative with this market. Intermediate term we're on the sidelines, and short term yesterday you could have took that as a position to buy into a long position on a short time frame. Moving to the Nasdaq, it's up plus 60. Still monthly trade triangles in a downtrend. Intermediate term weekly trade triangles in an uptrend, which means that we're in a sideline mode on intermediate, and short term we could be in a long position based on this daily trade triangle. Moving along the S&P 500, much of the Nasdaq is up plus 60. Long term we still remain bearish this market with a red monthly trade triangle. Intermediate term traders are on the sideline based on this green weekly, and short term traders could be in a long position based on that daily. The euro still had a little bit of a pullback today. It's a plus 90 down from plus 100 yesterday. Currently trading at down 0.04%. It's really nothing. So it's kind of status quo for the day. We're long across all time frames this market. Gold, huge shortly after I went off the air yesterday, we issued this monthly trade triangle at 1,672.40 to enter a short position across all time frames. So there it is, monthly down, weekly down, and the daily down. Scores a negative 75. You actually notice right here, I'll kind of turn on my tool here. It's the 200-day moving average, and we're right up against that level. Right around that 1660, 1665 level. If you see it dip through that, you could continue the downside. There's definitely a level of resistance right there at that 200-day moving average. And we'll move along to silver. Silver, of course, short-term traders have been short silver since December 14th at 32.18. Currently looking at a negative 70. Long-term, we're still bullish this market. Intermediate term traders are on the sidelines, and short-term traders are short this market based on the entry point at 32.18. Currently trading at 31.17, and it's kind of much like gold. It's kind of getting down to this 200-day moving average level. Not quite as close as gold is though. Copper's been kind of topped out, moved down, made a big move down today, 1.18%. Scores changed to a plus 55, so it's in that trading range. Long-term, we're still long this market. Intermediate term, we're still long this market based on a monthly green and a monthly green trade triangle. Short term, we're on the sidelines based on this red daily, and we're getting pretty close to where we want to be. Goal or this, we're going to be looking to change this weekly to red at 349 level. So currently trading at 359. So we're looking at about 10 cents, a 10-cent move, which would be significant for the rest of the day, but definitely something to watch the rest of the week. So 349. That's our level to watch to go short copper on a short time frame and exit our intermediate term positions. Moving along, move over to crude oil. Crude oil has actually had quite a run up the last few days. Actually had a run up today that is when the Commerce Department announced that supplies fell by 1 million barrels, about half more than they were expecting. They were expecting about fall about 500,000. It's actually 1 million. They actually got some a boost from the German economy, saying that consumer sentiment in Germany is a little bit better, which is huge for the European government over in Europe, being that they are the largest consumer over there, largest economy in Europe right now. Currently negative 65 monthly is red from 85.18. Intermediate term we're still short from 85.36, and short term we're actually out based on this green daily trade trial, and we're looking for, I'll show you here, we're looking for this red weekly to change green at 90.33. If we get to 90.33, we'll get a green weekly signal in a short time from to enter a long position, and that'll signal an exit for intermediate term traders to head to the sidelines. So 90.33 is the level we're looking at, and I expect today, if we continue over this 90 level, as you can see, we'll kind of draw this line here, is right here. You kind of see that's been a level of resistance for crude oil right at that $90. I think if we break above that, it could be off to the races. We'll have to watch that the rest of the week to see how that plays out. Move along to 4 stocks I just thought we'd take a quick. I found these in a recent trade triangle list today that triggered new monthlies today. Oracle one triggered a monthly entry to the long position at 33.29. It's currently at plus 100. See, it's kind of had a nice breakout move today, currently trading at 34.29. Another one is Johnson Controls. Issued a monthly today at $29.59, currently trading a little over $30 a share. Currently at plus 100, so we're long across all time frames. At that slide, we also take a look at UPS. This actually popped up in my, I got an alert for it today out of my portfolio that we issued a monthly trade trial that I was waiting on. It came in at $75.25, currently trading just shy of $76 at $75.97. UPS plus 100. I know just from personal experience, I have some friends that work for UPS drivers, and they are just crazy busy this time of year. And I thought it'd be fun just to kind of take a look conversely at another shipping giant here in the United States, which is FedEx. Currently plus 100. You actually see we got a long re-entry signal on a weekly here at 91.16. And it's currently trading up here around $95 right now. Nice little trade with the trade triangles there. Kind of confirms that with the holiday season and everything going along, that the shipping guys are really making the stuff move right now. Hopefully they're getting your gifts to you on time. I know Christmas is right around the corner. Clear the screen here. With that, that'll wrap it up for today. I'll be back tomorrow, of course, at 1 p.m. for your Thursday update. Every discussed today, and I hope you have an enjoyable trading day. Thank you for tuning in.